Hey folks, Lucas Ballahud here with Coldwell Banker RMR and the Ballahud Group. Thanks for joining me today as we take a deeper dive into the real estate market here in Durham region and the potential impacts of an increase in interest rates will have on the future home market and future home values here in the area. So what we're going to do today is take a look back at the month of October, the market stats very briefly, and then take a look at historically what occurred back in 2017 under those market conditions, what happened to the market as a result, and what we might project to take place here if the government were to do similar things in 2022. So let's jump in. From September, the October market saw an increase of about 2% in the average sale price here in Durham. The number of listings dropped coincidentally, and there was actually an increase in the number of sales that took place, a very small one, but an increase nonetheless. Now that's contributing to our extremely scarce inventory market we're dealing with right now. We're still sitting around 2 weeks of inventory available, and homes are flying off MLS still at under 10 days on average. So it's still a very strong seller's market for folks out there. But what's going to happen to the average sale price if the government is going to step in, similar to what they did in 2017, and start raising interest rates? Let's take a quick look at mortgages today, and then we'll go from there. So in order to qualify for a mortgage now, this mortgage stress test, they made some new changes this year in June to increase the pre-qualification rate to being either 5.25% or prime plus 2, whichever is higher. And that's where we have to qualify at, right? So today's prime rates offered by the Bank of Canada is 2.45%. And it's been that way since March of 2020. They offer obviously a mix of packages, whether fixed, variable, conventional mortgages of various terms. So it's important that you consult your licensed mortgage specialist or mortgage brokers. Make sure you're getting the proper expert advice on what those products are and how you can best set them up for you and your family. So let's take a look back at what happened in 2017. So at this point in time, this graph anyways, is going to show us the changes in interest rates as well as the correlation to average sale prices as a result of different points in time. So there's 2 points in time I want to look at here that are of importance to us. August of 2018, the last time the rate increases stopped, and what the average prices were then, and what happened in March of 2020 when they dropped the rates quite drastically overnight, and the consequences of that, on the real estate market here in Durham, quite frankly, throughout Canada. But what happened was the interest rates in 2017 were at 2.7%. And the average sale price at that point in time was $615,000. Now, not everyone may recall what occurred in 2017, but there were similar situations happening as they are now, where you're seeing multiple offers, dozens of offers, in fact, on homes, and they're going well over asking, sometimes conditionless, and there's very little inventory on the market, at least compared to what we would typically see, right? So at that point, the government instituted some changes. They implemented a foreign buyer's tax. They implemented some changes to the mortgage stress test, and they started increasing rates as a result, right? So at that point, we're at 2.7%. Over a 14-month period, they increased to 3.95. That was a 1.25% increase in the interest rate from the Bank of Canada. Quite drastic when you think. Now, those are 2 benchmarks we're going to hang on to for later on in this exercise. So as you see here, the price just only dropped around 4.4% to 589 to when the rates plateaued for a period until the spring of 2020, where everything took off again after the rates did drop. So like I said, we had a 1.25% increase in rates, 4.4% adjustment in the average sale price. One thing I do find to be somewhat interesting, though, for this period in the middle here, where there was some, no change in the rates, is November of 2020. There was a much slighter or a less steep period of growth. But when you factor in November 2019, when the COVID pandemic started to hit North America, there seemed to be a somewhat drastic change in the average sale price there, where if you look back, it jumped up around $40,000 in a 4-month period. So something certainly that that maybe contributed to that period of growth. Nonetheless, I do digress. So since the interest rates had dropped to 2.45%, a 1.5% decline overnight, essentially, that was one of those significant contributing factors to why interest rates, or sorry, not interest rates, home prices have skyrocketed over 50% in the months that followed. So what we're going to do next is try and simulate hypothetically what were to happen if the government were to make some changes to the interest rates similar to this number here, 1.25%. And if this decline were to happen, what would the prices look like here in Durham region? So we've taken the average sale price and we've plotted it over the average days on market, which, as you can see here, is actually a somewhat of an inverse representation of the average sale price. So as prices drop, days on market typically increases. As prices go down, days on market will go up. So I just said the same thing twice, didn't I? But you get the point. So what we're going to look at then is take the similar rates changes from here and apply them to what's going on here. So in that point in time, there was a 14-day increase in average days on market during that period where interest rates were dropping and the market slowed at 4.4%. So we're going to take these metrics and try and apply them here. Now, what we did was, in this hypothetical scenario, was from the average sale price here in October, we assume that the government's not going to, turn the count or wake up one morning and decide to raise interest rates. There's going to be some time that's going to take place before they do that. So we'll assume in this scenario that there's going to be around a 2% increase over the next couple of months in the market. And we're going to get to somewhere in January of around $1,027,000 in this scenario, right? So from there, we apply a 4.4% decline in the average sale price over a 12-month period. And we average that decline out over the 12 months, and we landed at $984,000. It's not a huge difference if you look at it year over year. So what is actually going to happen here is we could see a bit of a balancing in the market, a slowing in the market, instead of that very steep price curve we saw since rates had just dropped overnight and were so low. One thing we don't have control over, though, is how much the rates are going to go up and how quickly they're going to go up. So this is something that we need to keep an eye on going forward. But if they were to do what they did in 2017, this is where we can find ourselves. A little bit healthier of a market, 23 days, 984, compared to 9 days in the market, and a pretty incredible price jump that we've seen in the 12-month period, or 18-month period, I should say. Nonetheless, a lot has been happening. So, right now we are in a current seller's market where there's still far more buyers out there than there are sellers. And as long as interest rates do remain where they are, we should see that continue. But in the event that rates go up, buyers are going to lose their borrowing power. So you're going to have less negotiating range when you're entering into those negotiations on offer day. So some folks are actually going to get priced out of certain homes or neighborhoods where they may have been looking before. We could see some clustering that occurs in the market at that point, maybe at the entry level point. For home buyers, that could be a consequence we see here. But until some of those buyers are either priced out of the market or end up buying a home, we could see the seller's market continuing for an extended period of time here. So buckle up. We're not likely to see any changes until maybe the bank does intervene, and we see what happens from there. Anyways, folks, I'm very thankful that you were able to join me today. I very much look forward to our conversations again next time. So until then, have a great day. We'll chat soon.